Hi everyone, welcome back to Be Rich. It's Sunday and it's fun day. Well, usually on Sunday I try and talk about something about personal finance or something of interest, something to spark the inquisitive person in your mind and get you thinking as we recover from the weekend and we get into the week because the markets are closed and there's nothing much to talk about. So today I thought I'll talk about something interesting which has been making the rounds, the news. It's been going on and off for a few months now, and again it's cropped up in the news. Something that interesting that cropped up in the news has been going on and off for some time, and a lot of people have been asking me and speculating on it. And so I thought I'll talk about that. I do have to refer to my notes. Some of you get upset that I don't maintain eye contact all the time with the camera. It's very difficult to do that when I have my notes down here. I'm not a professional TV setup or a studio where I have a prompter where I can scroll through and read. So, Drew, I ask for your forgiveness and you being accommodating sometimes when I look down like this, glance down, to refer to my notes. The company which I want to talk about was Manappuram, and news was, which has been going on and off, is there's a company called Bain Capital, which is a private equity firm, which is trying to buy a controlling stake from the Nandakumar family, which owns 36% of Manappuram. The deal's been going on and off for some time, and the plan by Bain is, if they do manage to secure this deal, these are all rumors, of course, so do keep that in mind. You know how rumors are. We hear rumors in film industry all the time, and we don't need to take it with a pinch of salt. You need to take it with a ton of salt. So keep that in mind. The reasons why Nandakumar's family wants to exit can be plenty. The reasons why Bain wants to acquire Manappuram is very simple. It's for its gold loan business, and they want to take this company 36%. And once they secure that, they do want to make an open offer to the rest of the shares in the market and take the company private, is what the rumors are. So I thought, instead of dwelling on that rumor, I thought I'll talk a little bit about what private equity is, how it works, what's happened so far, what is the history of that, and what are the upsides and downsides for investors, and finally, what have they been doing in India, and come down to Manappuram. So that's the point of this video. So if you're looking for something secret about Manappuram Bain Capital inside scoop, there's no inside scoop because it's still in rumors. They're negotiating. Everybody negotiates. You know, when you want to think about going on a holiday, you open the browser and you put different countries and look at flight prices, look at hotel. Doesn't mean you're immediately booking and you're leaving immediately or leaving the next moment. It's just that you're shopping. Bain is doing that. Manappuram is also doing that. And there's also news that other people are also trying now, that since Manappuram is interested in selling, other people are also trying to acquire that stake. So if I have any breaking news, I'll definitely come back and share it with you. So getting back to how something like Bain works. The way Bain works is, me and a group of my friends, let's say Rupesh, Arun, and me, decide to start a private equity. We create a company. We say, okay, we call ourselves the Rupert Private Equity Firm, naming after our founder Rupesh, who thought of the idea. And we create ourselves a company. And then what we do is, using Rupert's big influence, we go ask Rupert's friends who are working in various pension funds, they're working in sovereign wealth funds, and they know high net worth individuals. And we go tell them, like, see, we got this equity firm created. We have some brilliant minds working for us, and we have some great opportunities through our network to invest in these great places. So why don't you give us some of your money and we'll take it and invest it for you, and we will get you returns. That's what basically private equity guy says. So then they sign up with an LLP with whoever wants to invest in through this private equity. So the LLP is signed, and the main governing partner is the equity firm. The equity firm is known as GP, which is a general partner, who's in charge of deciding where the investments are made, what are the returns that come from this. All that the GP takes care of, while the LP, who is the limited partner, gives the funds and enjoys most of the benefits that come from it. So this is how it works. Bain Capital's notable person who was there in the initial managing partner is, of course, the American presidential candidate Mitt Romney. It's famous for Mitt Romney because, he is a Republican senator and now he's retired, and he doesn't have anything to do with Bain per se anymore in operations of Bain, but he was one of those guys who founded Bain way back in the day, and it's famous for that. And the other reason why Bain is famous for is their size, and they've tied up with a lot of pension funds like the Californian Pension Fund, the Canadian pension funds, and the Abu Dhabi Sovereign Fund, the Singapore sovereign fund. They all decide, the sovereign funds to employ different private equities to help them get these kind of deals. And Bain's series of deals which were made, they helped Domino's, the pizza company, infusing cash into them and helping them get up and running into a big company, and finally took them public and exited that. That is one of their famous ones. And of course, the controversy in Bain Capital is the Toys R Us story. Those of you who do not know the Toys R Us story, there's many YouTube documentaries about it and stories about it which you can read online. But then, in a nutshell, what happened was Bain Capital and a bunch of other private equities got together. They decided to buy into Toys R Us, which is a public traded company. They bought the controlling stake and then they took the company private by making an open offer. Shareholders were given the money and they took the company private. And then they tried to get the company going. Unfortunately, things turned sour and the loans became too heavy. And finally, the company collapsed and it went to bankruptcy. And there's a lot of controversy for what happened to the employees in the business and what the role of private equity is in that. The role of the private equity in that was something known as LBOs. LBOs, leveraged buyout. Leveraged buyout, what happens is, let's say the private equity has got funds coming in, right? And they want to buy something which is very large, where they don't have all the money to buy it. So what they do is they go to a bank and they tell the bank, we're going to buy this and we'll give that as collateral to you to give us the money to buy it. I know it sounds crazy. So it's literally like buying a car. You can't afford to buy the car. So you tell the bank, give me the money to buy the car and the car will be in your name till pay off the loan, and then you can give the car back to me or something like that. That's what hypothecation is. Sometimes the shares are vested into the bank or sometimes it's not. But basically, that's one way they raise a capital. In that, they have three ways this LBOs are financed. One is known as senior debt. Senior debt for private equity is where they take the company which they're acquiring, they take the shares of that and pledge that. And this is the debt that is the most critical because it has to be paid off first. If the company they're acquiring goes bankrupt, this senior debt is a debt the private equity is most burdened by, which they have to pay off. So they'll always be keen to pay this one off most importantly. The second one is known as subordinate debt. Subordinate debt is there is no security given to them for lending the money to the private equity to the acquisition, but they're given higher interest rate. Like we have junk bonds in our parlance, we offer our capital knowing that it's very risky, but the payoff is we get huge interest. So that is subordinate debt. And the third one is something known as mezzanine financing. Mezzanine financing is also a hybrid way of doing. It's like warrants, what we have in shares, where some of it is given as debt and some of it is taken as equity, where they have certain shares is given to them and it's financed like that. That is the least. So first, debt which needs to be paid off by the private equity is the senior debt. The second one is subordinate debt. The last one, which is, if it's possible, they'll pay off if the thing goes bankrupt, is a mezzanine debt. So that's how these are structured. These are the LBOs, and LBOs are famous for two reasons. It was used in Toys R Us, which led to debt becoming so heavy, all that money which they borrowed became such a burden on Toys R Us, the company, because it was taken private and Toys R Us could not generate enough revenue to pay off these debts. So then the private equity decided to slowly sell bits and pieces of it, and finally it went bankrupt. So that led to a lot of controversies. Has this been done in India? Yes, it's been done. Bain Capital had done this before in India in 2012. They took GMR airports private, and because they saw potential in airport business in India. And they have done other deals in India. They're invested in L&T Finance. They're invested in Axis Bank. So what is their interest in Manappuram? Well, they're interested in Manappuram gold business. They're not really interested in the microfinance business. So that is why the negotiations are right now locked in, right? Because the Manappuram gold business is a long-term old business and it's very profitable and it's a proven track record and it's very easy to understand. While the microfinance business in Manappuram is a very new business in Manappuram and it's still having teething issues, and we know whatever is happening with NPAs and NBFCs. So all that controversy is there. So that's where the inflection point is at the negotiation, and that's where it's standing and stalling on. So if Bain Capital acquires this Manappuram Finance, their hope is that they will finally take it private and it will become a private company of theirs. And we as shareholders, what are our options? In any situation like this, we as shareholders, especially you and me, who are very, very small, minute shareholders, we don't really have a voice. And we can try and say what we feel, but it's not really going to be of any consequence. It's between the Nandakumar family and Bain right now. And if they do decide to go through it, we only will have one option. One, if Bain Capital decides to go private with Manappuram, they'll give us an open offer. We'll get a letter from Bain Capital saying, "We are offering you this. Are you ready to accept?" If majority of the shareholders accept in the market, then if you like it or not, the share will be removed from your demat account and that much money will be credited to your account. There's tax implications in this. It's not happened as yet, so I don't want to get into the tax implications, right? So let's just say hypothetically, if it happens, majority of the shareholders agree to it, Bain Capital will pay you the money, whatever is agreed on. Usually it'll be a premium over the traded price. Let's say Manappuram is traded at 180 rupees, they'll offer a premium of 250 rupees. And during that period where these negotiations are going between the shareholders and Bain, you'll see the Manappuram stock price going up. If it secures, then it will close at that point in time, like you saw on Twitter, what Twitter happened with Elon Musk. You'll go to a premium and sold and you get your cash. Sometimes it collapses. In the case of other companies we have seen, I think in Kellogg's or some other company where it collapsed, the negotiations collapsed and the price again went back down to where it was. So these things do happen as an investor. There are opportunities and those are the opportunity as an investor you have. The other thing, if he decides not to take it public and they continue to hold, they'll be a majority stakeholder. They'll have influence over the board, how the business is run, and that is something we'll have to wait and watch as investors. Is Bain Capital a bad owner? So far, they have not shown anything to be a bad or a great owner. We'll have to wait and watch to see if this comes to fruition. And if it does come to fruition, what do we do? So keep watching. But I hope today being Sunday Fun Day, that you understood the main takeaway from this video is what is a private equity, how it works, how are they financed, what an LBO is in basics, and what are the goods and bads of it, and what it means for us in terms of shareholders of Manappuram. Should you panic? Definitely not. As I said, these are just noise as of now. It doesn't come to anything as yes, it's happening. If it is happening at that point of time, we'll get far more clarity and I'll definitely share it with you. Am I immediately Monday morning changing my stance on Manappuram? No, nothing has changed. I'm chugging along, doing whatever I'm doing as business as usual, and that would be my recommendation to you too. Hope you enjoyed the video as always and have a wonderful week ahead of investing. Keep it in different coffee ranges as always. Do join me on Instagram in our group and community there where we have these interesting conversations playing out even longer, and there's far more debate over there because I get to actually talk with you guys and not look at a camera and do a lens and hope in the void beyond anything that I reach out to you, because I can't really hear from you, can I? I'll read the comments where some of you are worried about my watch or worried about the clothes I wear or worried about the way I look, which I find rather amusing when I do it. Thanks for watching the video and I'll see you again soon. Thank you.
Hey guys, that my uncles Vinod Srinivasan, Anand Srinivasan and I have rolled out our Substack, which is basically a blog/newsletter where we're going to post our original research onto it, and we've analyzed macroeconomic trends. And a lot of you know my uncle Anand Srinivasan and I regularly write for The Hindu, and these articles are also going to be made available for you in the Substack. The link is moatinvesting.substack.com. You'll find it in the description and in the video right now. We hope you go check it out. We've put a lot of time and effort into it. And please give us comments and feedback on what you read. Thank you.